everyone, and welcome back to another promising episode of our weekly market analysis series. In this video, we will be diving into the GBPUSD chart where trading activities have been confined within a crucial confluence as illustrated in our previous trading setup. So as you will see here from the daily time frame from last week's trading setup, price action was more or less within that supply zone above, just right above the 1.2700 area, um, sharing a confluence with that descending trend line to reveal how buyers were finding it difficult to break through the descending trend line. And despite the prevailing uncertainty characterized by this whole choppy price movement, we were able to capitalize on some buying and selling opportunities within this consolidation phase, which extended into the end of the week. For a detailed breakdown of each of our entry points, check out the link in the description box below. So, in a sudden turn of events, the British pound sterling experienced a sharp rebound against the US dollar on Friday, and this was in response to the US data showing that the underlying inflation in the United States grew at a slower pace of 0.2%. And coupled with the positive news from the United Kingdom, where business sentiment improved thanks to cooling inflationary pressures and expectation of potential Bank of England interest rate cuts coming anytime soon. And with the upcoming week devoid of any top tier United Kingdom economic event, one can't help but wonder how the market will move in response to the improved business sentiment in the United Kingdom vis a vis the backdrop of the softer than expected core PCE and the hawkish stance of the Fed policymakers who have continued with the narrative of maintaining the current interest rate until inflation sustainably returns to their 2% target. As always, we will be leveraging on our basic tools from the economic calendar, trend lines, key levels, and chart patterns to predict potential price movement in the coming week. Before we jump into the details, please note that this presentation is designed basically for educational purposes only. Remember, forex trading carries its own inherent risk, so proceed with caution and seek advice from professional financial advisors before making any investment choices. So, with that being said, here, let's dive right into the business. So, our first point of contact for this week is going to be on the 4 hours time frame. So, I wouldn't be going into the daily time frame as we really do not have any new significant structure on that particular chart. But if you do want to have a look into what we talked about last week, well, you can check my previous video on the GBP USD. You'll find it somewhere in the description box below. So right here on the 4 hours time frame, what I did was to take into consideration the character of price action since the mid month of April. That's about 7 to 8 weeks um, thereabout of historical data to understand the current market dynamics. And doing this correctly, you will see that for the last 6 weeks thereabouts, this market has been very bullish. And to further emphasize the momentum here, we connected a series of higher lows, giving us a couple of ascending trend line to work with, where the major one is right here at the bottom. And of course, you know how we use our trend lines, especially the ascending trend line. We want to keep a bullish momentum unless the market says otherwise, where the breakdown retest of the trend of the ascending trend line could signal a sell-off in this market. Now, in addition to this ascending trend line is our key level. Remember, we've been using this key level for the last couple of weeks now. That same 1.2700 area, which obviously had played a significant role in determining the direction of price action in the last 2 to 3 weeks. And of course, you will see here that ever since price broke out of this 1.27 during the mid month of May, price action has always maintained its momentum above the structures, as you will see that every attempt by the sellers to break through this level has always been met with strong resistance from the buyers, and this obviously happened into the last trading day of last week, as you will see here. And as long as price remains above our key level for the week, we obviously want to be looking out for patterns and structures that support the idea of buying that asset. Now, from the look of things here, I have a very strong feeling that after considering the development behind the scenes, I have a strong feeling that price may likely continue to the upside. Um, Especially after the core PCE came in. And from a technical standpoint, following this impulsive bearish leg after price action hitting that psychological level at the 1.2800 area, I'm beginning to see a transition of price action into a reversal pattern in the form of a double bottom structure where the psychological level at the 1.27500 area will be serving as the neckline of this reversal pattern. So price breaking out of the neckline at the 1.275 will make price back above the ascending trend line to continue the uptrend scenario. However, in as much as we are looking out for buying opportunity at this juncture, we cannot ignore the potentials that sellers might likely come in, as we do not know what the US economic data from next week is going to be bringing to the table. So, should in case sellers have the privilege of capturing the momentum from the buyers, the only condition that will make me consider selling this asset is for price action to break down both the 1.2700 level and that ascending trend line to give me a beautiful signal to join that decline to the downside. Now, before I close on this video, it's important for us to keep tabs with the fundamental factors that may likely influence the decision making around the zone we've identified on our 4 hours time frame. And by keeping tabs with the fundamental factors, of course, by monitoring the economic calendar, we want to try and pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us some valuable information and, most importantly, timing to position ourselves for the next move. Now, based on the asset we are looking at, we will be focusing on economic features from both the United States and the United Kingdom. However, for this week, we do not have any high impactful event from the United Kingdom. So, for this week, the first high impactful event is going to be coming on Monday, June 3rd, and that's from the United States economy. And we have the ISM manufacturing PMI, which will be giving us an insight into the health of the manufacturing sector of the United States. Then on Wednesday, we are going to be looking at the ADP employment change, which is considered to be another significant event, a monthly economic report that provides us with an estimate of the change in non farm private employment in the United States. Then on that same day, we are going to be looking at the ISM Services PMI, a key economic indicator that measures the performance and expectations of the service sector in the United States. Then on Friday, on June 7, we have the average hourly earnings, another labor oriented data, which will be giving us an insight into the average amount earned per hour by private sector employees in the United States. And of course, it's considered to be a crucial labor market indicator. Now, finally, on Friday, we will be looking at the major highlight for the week, which is the non farm payroll, popularly known as the NFP, a key economic indicator that measures the total number of paid US workers, excluding farm, government, and non-profit organization employees. So these are the high impactful event we will be looking forward to. And of course, as this events draw near, it will be influencing the sentiment. And of course, during the early hours of the week, we shall be monitoring how market participants will be reacting to the structure. And of course, I will be in the comment section of this video to give you an update on what I think or where I think price is likely going to go, at least for the first half of the week. If you have found this content helpful and useful in making your independent trading decisions, I will greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.